Hello. In this video I'm going to go over JS Services Monthly Outlook, where we apply the same methods from our desktop application but only in a monthly structure. So I'm going to go over the structure of the Outlook. We've got the contract name. We're doing the SP 500 futures. This is the E-mini futures, and this is the monthly outlook for December 2015. In the initial paragraph, we're basically going to break down the expectation. So we're accepting buy signals above 2081.5, anticipating the bull trend to engage, targeting 2144.25 and 2173 on the initial advance. So we expect the market, as long as it's holding above this level, we're anticipating a move up to 2144.25, if not 2173. So all trading above last week's low of 2065.5 will keep the positive outlook into the holidays. So this low, and this is the initial structure low point for this current positive surge. So as long as we're holding this positive price structure, we're anticipating that to continue. So ride positive price structure, higher move highs, higher move lows. Basis the daily. A break under 2065.5 will tap the brakes on the underlying positive momentum, signaling a corrective trade down to 2029. So we get a break under here. It's going to take some of the juice out of the positive momentum, and we expect a break down to the 2029 DPR level. So this is the downside pivot reversal level. Here we expect a bounce with the market stabilizing here for a resumption of the bull trend. Only below 2029 does the transition occur in the underlying market state, with 1913.75 target on any negative shift. So if we get a failure from 2029, we're anticipating a corrective move which can bring the market down to 1913.75. So that's the general outlook, and now I'm going to get into the details of why that's so. JS Services incorporates a strategy-based trading approach where we look to align the market state condition with our trading tactics. And this month the S&Ps are in a bull trend, and a bull trend is defined as a market that's making higher move highs, higher move lows structure. Doesn't mean there can't be corrective setbacks, but negative price action is expected to exhaust above the lower inflection point that maintains structure. And the price point that's maintaining structure for this month is 2029. This represents that lower trough. This represents what makes the bull trend true. As long as the market's holding 2029, it's in a bull trend. If it breaks this, it's breaking market structure, and it's no longer a bull trend. It's in transition. It's something else. Maybe it's going into neutral or corrective state. It's no longer in a bull trend state, and we shouldn't hope or think that the market's going to perform like a bull trend. As long as it's trading above this price, we should anticipate it to perform like a bull trend. All the work we do is quantitative. We strive to present the facts. This is what is, and this is what the structure is of the market. And so now we're going to talk about the structure of this condition. We can define the structure of any market state with 3 price points. One price level, we call this our reversal level. It's the sentiment bias for the trade period. Some people may call it the over-under number. And this is the price point, kind of the line in the sand for the month, with a buy break bias above here, sell rally bias below here. And when we put that on the canvas of a bull trend, it's identifying that lower trough. It's identifying that key structure point for the bull trend. The sentiment bias is a key price point, and it can skew the market state. So in this instance, it's in line with the positive bias of a bull trend. Sometimes that bias can be farther below the market, and when sentiment is way below the market, it's telling us that the positiveness at higher levels may not have enough energy, because the market can break all the way down to this level and still be good. And conversely, sometimes when the market sentiment is above the market in a bull trend, it's signaling that we might be in for more of a corrective position. Or when sentiment is balanced in the middle of the critical range, it's more of kind of like a power stance, where the market sentiment's balanced in the middle of the critical range. It's more of a prove it to me. The market should just go. It's ready to make a decision. Are we ready to just run, or is that it? And we're going to transition into a kind of a corrective market state. Next, we have what we call our critical range, which is defined by the UP upside pivot and DP downside pivot. This month, the sentiment bias is at the lower end of the critical range, so this is kind of the big neutral zone the market's trading in. And the top of that critical range defines the upper peak. So that's the breakout where the market will extend, the bull trend will extend into a new leg higher above this price point. So those are the key structure points for a bull trend. We have the lower trough and the upper peak. And we've defined that lower trough at 2029 and the upper peak at 2144.25. Markets are in constant transition from one state to the next, and these price points represent where those transitions will occur. If we look at the markets as either expanding or contracting, these are the points of dynamic equilibrium where the market is reaching its zenith on expansion. Is it going to continue to expand, or is it going to come back and contract? At these points, is this market going to hold structure of the bull trend, or is it going to break structure and we're going to see a transition into a different market state condition? When the market holds structure, it's easier to predict because we can anticipate the market's going to perform like a bull trend. And if it breaks structure, we're transitioning into a new market state. We're not sure what that state is. So we're always monitoring price action within the market structure. So because the R level is below the market, it gives us some additional insight to this market state condition. And we know that we have a lot of energy at this level, and we should see a pop, should see an acceleration in momentum. If we get a breakout above the upside pivot, we would expect to get some power there. And also, if we get a failure from this level, we could see a pretty good acceleration to the downside, one of those sharp corrective moves if we get a break in structure. Because we're in this state and we have this structure, there's certain strategy themes that are inherent. We have an optimal strategy theme, which is a buy R fade, so we're going to fade momentum into the R level. We also have a price point called a directional, which is the midpoint of the critical range. So the critical range is defined by the upside pivot and the downside pivot, and the midpoint of that critical range is what we call the directional. So it's kind of a rotational number within the critical range. So we see the market above the directional, it's leaning positive, below it's leaning negative. And we can actually break the critical range up into bigger quadrants. So we have our upside pivot, downside pivot, the directional, and then we have these interior, we call it a CR plus and a CR minus, and then on the critical range extremes, positive and extreme negative. So what will happen, this is defining the structure of the market. This is market structure. And what will happen in a digestive trade is you'll see the market rotate around the directional within these interior structure points. And when we get a breach of those structure points, the market may pull back to the directional, but it's a tell that the market's making a move for the extreme, and the positive up to the upside pivot, or breaking below here down to the downside pivot. And depending on the market state condition, we might get a small pullback, we might get a bigger pullback in more of a neutral market condition. And then if we do get a breakout of the critical range, these extremes can become the flush points. If we get a real squeeze and we really get a lot of emotion in the market, and that emotion tops out, a lot of times it'll top out at these extreme prices. So it's a good confirmation point that yes, we've broken out of this critical range and the market's ready for an expansion. And again, if we do get a breach of that CRX plus, that's a good confirmation tell. Depending on the market state condition, if we're in more of an accelerated advance, you won't see really any pullback. Different market state conditions, you could see the market pull back all the way to the CR plus before it decides to go move higher. But this was the tell that said yes, we confirmed a breakout, and market structure has been broken, and the market's in transition. So in our optimal strategy, we're fading momentum into the R level, the DP, the support level, and we know that's our structure low point. Again, we're presenting the facts, and this is self-evident that the best thing to do in a bull trend is to buy off the lower trough. So this is the leverage opportunity. And if the market starts to move forward, it should start to build not only positive price structure, but it should also build positive market structure. So it should climb this price map ladder. And the other optimal strategy is a buy DIR breakout. So a breakout above the DIR, it should just hold structure and go. And we should anticipate this market to perform like a textbook bull trend. If the market breaks structure, there's two breaks in structure. One would be a false breakout to the upside. So we have a sell UP reversal. So the market trades higher above the upside pivot, can't hold it, and then trades back down through it, giving us a reversal signal. Or we get a breakdown below the R level, giving us a sell R breakout. These are the underlying strategy themes for this market state and structure. So we're looking to identify how is price action moving within market structure, and is it moving within any of these themes. And if it is moving in these themes, we want to get on board with these themes. Another thing this work provides us with is the price segment distance the market's trading in. We call it an average price map distance. And so the market likes to trade in segments of half segments and full segments or 2 segment moves. So it provides us with some trade vision. And this is part of our market metrics. And currently for the month, the market is trading in 79.5 handle moves. So if we are able to get ourselves into an opportunity, say a buy DIR breakout, we're looking for about an 80 handle move. That would be a normal target. If not, 160 handle move. We're not sure how the market's going to get there. It just wants to trade in those segments. That's what it's paying out. So we always look at half segment, full segment, and 2 segment moves, or 2 APMD moves. And absolutely in event, you'll see 4 APMD moves. The other metrics we have are the variance around an inflection point. So we can identify that kind of the area of influence. And we have a variance, which is really the optimal entry area. This month, the variance is 6.25 points in the S&P. And then we also have what we call our alert distance. And so this is the big sweet spot. And depending on the market state, you're able to accept buy signals within that variance. So we have 11.25 points from the figure. So the alert distance on the directional is going to be 2092.75. So up to 2092.75 is the alert distance to the upside above the directional this month in the S&P. You can also look at that alert distance as a flip. So if the market would move to the alert distance to the opposite side of the price map level, it would put you on the sell side. When we're looking for reversals, we're looking for the market to start trading, to start below the alert distance, move back up through the alert distance, and then come back through, and that qualifies for a reversal. So on the hedge strategy theme, we'd want to see the market go through the upside pivot above 2155.5. So the upside pivot plus a little more than the alert distance. We'd want to see it go through that, at least that amount, and that kind of triggers that we've violated the upside pivot, and then we come back down through it. That would be a reversal. So think of these metrics as areas of signal acceptance. So avoid signal acceptance in the middle and focus signal acceptance within these metrics, using a derivative of this average price map distance for your trade vision. So in our commentaries, we give further explanation of how the R level is influencing the market state, and then we provide the full price map, and we overlay it on top of a monthly. I've got a weekly chart here with it overlaid, and we can see at the moment we're trading above the directional, so this is positive. Here's the 65.5 last week's low, So as long as we're working positive structure above here, we're anticipating, we're in this buy DIR breakout theme, and we're anticipating this market to hold positive price structure. And as long as it's holding positive price structure, we should anticipate at least one average price map distance, which would bring us up to 2144.25. Again, that's kind of the minimum move. We could easily see 2 APMDs to bring us up to 2201.75. The outlook also includes some analysis on the VIX, and so it's nice to have this as a. So currently we're going to use the 2081.5 directional as a guide to the trends and tensions right now. So we start the month. If buyers are ready to make a run, the market will build positive price structure above here, targeting 2144.25, or up to this 2173. We call it our CRX plus, and we want to use the directional, the 1607 VIX DIR as confluence. So the expectation is that the VIX will remain under 1607, and the S&P will remain above its directional at 2081.5. And then we want to note that we do have some good support down at 1069 and 809 in the VIX. So down here. So if the market does start to rally, and we see some confluence with the VIX approaching its support levels and the market approaching resistance at the same time, we would anticipate a reaction. So we would anticipate a rejection, and we could easily see a half APMD, if not a full APMD rejection. And then further, going through the VIX, if the VIX does start to trade higher and trade above this 07, it may be a tell that the market's going to take out this 2065.5 level. So if we see the VIX firm up above 1607, that might be the tell that we're in for a corrective trade targeting 2029. So we want to look for that confluence. And if the market does get excited, we want to identify this even in a quarter level. That's the CRX minus number, and that's our confirmation to the downside breakout. So if things do get excited, and the tell would come from the VIX here trading above 1607, and if it gets real exciting when it starts to press up to 2109, even its CRX plus at 2369, and we're down here at the lower CRX minus, and the VIX is up at its CRX plus. And you start to see a stall or a turn. Really any positive reversal signal off of here, would be kind of signaling the end to that momentum. If we do get a break and volatility starts to spike, and this thing starts to sell off, it's a break into neutral. So any positive price reversal, we want to jump on it. And if we're long vol, we want to get out of that position, because we're expecting volatility to snap back and the market to kind of bounce back into more of a digestive trade. All this analytics is just going through the facts. And the fact is, the market's in a bull trend. Fact is, bull trend expectation is higher move highs, higher move lows. Fact is, we've got our structure point is below the market, defining that lower trough. As long as we're above that price point, we should anticipate this market to perform like a bull trend. Because we're in that market state, and because we have that market structure, these are the strategy themes that we want to look to identify. And currently we have identified the market is above the directional, so as long as we're above that last week's low of 2065.5, we're anticipating this theme to continue. And we're going to use the VIX as confluence, supporting this state, structure, and strategy theme analysis. If you have any questions, please feel free to contact me at js@jsservices.com. Thank you.